Yeah.
And then what about condo market? Have you had clients buying condos?
That's a tough one right now because there's so much inventory. So there is a lot of great buys out there. But no, definitely the condo market. Again, we live in the GTA, we live in Toronto. It's tough to get into a single family home. For a starter, they're moving to condos for sure. Absolutely. So I am doing some condo purchases for sure. Not as much as before.
So let me ask you about this. Have you come across any new construction ones that bought 2-3 years ago?
I'm doing a couple right now.
Have you found issues with values? Because you know what's happened. They were buying at 1,200-1,300 square foot.
Yeah.
So when you're buying in 2021, 2022, they thought, oh, it's just going to keep on going up.
Yeah.
And so they were buying at a certain per square foot cost. And then lo and behold, they go to do an appraisal today. What's happening is, oh, you bought at 1,100, 1,200, 1,300 square foot. Now it's only 950 square foot. Have you seen any?
Yeah, values definitely have been impacted, especially when you bought at the peak on paper, on spec.
Yeah.
Right?
Yeah.
What's happening in the market, found that the builders were selling them at a projected price for when they were built.
Of course.
Right? So that's impacting it.
Because they thought it was just, nothing's ever,
Well, that's it. Because, it's constantly going up. I was like, wait, things aren't going to drop, right?
Yeah.
Rates were, sub 2%. Foreign buyers were allowed to purchase as well, which
did
a lot of the market. That's why a lot of condos are empty.
And, the one thing that Trudeau did probably a year ago now, the students coming in. So he took away the students.
Yeah.
They were coming back. They limited the amount that were coming in. That was impacting on some of that. Have you had a live example of you got a person bought for A and now it got appraised at B?
Unfortunately, I've had a couple.
Yeah. Is it large spreads what you're finding?
Yeah, the large spreads are, I think, mostly on the condo market. If you bought something, like I said.
I think the low rise, like detached townhomes, new construction, I think they're still fine.
Depending where, for sure. The value has been impacted a little bit. Okay. Again, it all depends on what you bought.
Correct. The ones that are coming up now, so we're into 2025, the ones that were bought in like 2020, 2021, maybe 2022, depending how quickly those projects again, there's still a lot more coming online next year, for example. There's one here not too far from where we're doing our episode that'll be done sometime in 2026. But so what the values, like, what have you seen? Let's focus primarily on the condo market because that's what we're talking about.
I think depending on when you purchase the condo, the thing with condos is from the day you purchase it to the day it's actually built could be 8 years, some condos.
Oh, yeah.
The worst depends on when you bought it.
Yeah, it's worst case for sure.
Right, so if you bought it, let's say 8 years ago, you're still okay, you're closing now. I just did a bunch of deals at Time and Space, downtown Toronto, and those values were good. Even though they bought it years ago, the values were still even coming in higher than their purchase price. But then you buy something like Nobu, for example, which was the first condo that I wrote sold for $1,000 a square foot.
Right.
I did a couple of deals there. The values were like a little bit lower. Some of them were either lower or right on par. And then there's other properties that I've done, that the values are, we're talking, like $100,000 lower than the purchase.
Yeah. So I had someone reach out to me. They bought a new construction condo in Whitby for $760,000. It was appraised at $608,000. Okay, it's a big difference. We tried to figure out some solutions, and thankfully he was in a position where he could close because there's a lot of buyers out there that are really in a tough spot. And going through all of this, the client got an email from the site developer because every new construction project, and you might be familiar with this for sure, has financial institutions that are associated with the project from the beginning. And they do that as, they're either, So thank you very much. Stole my thunder. So got in and said, hey, RBC for this particular project has a blanket appraisal on the whole building. They're doing the values on the purchase price. That was a bit of news to me. I didn't know. It sounds like you did, so I would love to hear more about how to explain, because that's a benefit. Because now my client, I've referred off to someone that I trust and like at RBC to do this transaction, because as mortgage brokers, we don't have access to RBC. And thankfully, he doesn't have to, shell out $140,000 because there's this blanket appraisal on the property. I suspect, correct me if I'm wrong, you might know a little more, maybe the developer has a really good relationship with Royal Bank and they're doing it to protect. Because like you said, long term, I think real estate will always be okay. But talk to us about this. This was news to me.
So appraisals, which I'm very familiar with at the bank, being at the bank. So essentially what it is, they do the appraisal on spec. They hold their database, for example. So whatever bank might have been on site, well, in this case was Royal Bank, they would have done their blanket appraisal when they launched the project. And they valued each unit at X amount. And typically those blanket appraisals, again, every bank's different.
Of course.
So typically those blanket appraisals, if they're up to date, the value should be there.
Okay.
Even though it's not really the true value. So really, in my opinion, I think Royal Bank's at risk here.
I agree.
Because today's market value is $300,000, for example.
Right.
And RBC did a blanket appraisal in 2021.
Right.
And they're saying it's worth $450,000.
Right.
Well, it's a big spread, right? So who's at risk here?
It's for sure the bank taking on the risk.
But not only that, think about it this way, Mike. The client is now leveraged. Because the client wants to sell. They're not going to pay off their mortgage.
Correct. And I agree with you. But you know what they say, maybe you kick the can down the road a bit in a case like this.
You have to hold on to it.
Correct. Like, I mean, and my client, you know, he was buying it as a rental property. So he already had it during occupancy, had it rented. That doesn't make it okay. But to your point, you know, if he decides to sell, and we've had this conversation a year from now, 24 months from now, it might not be enough, but maybe the silver lining, if he had to pay out 140 today, if this didn't have a blanket, maybe 2 years from now, if that's what he wants to sell, he'll only have to pay out 70,000.
Yeah,
so maybe half. Now, I'm not saying the value would be all there. It may help mitigate.
For this specific, scenario, it worked out for the client.
Correct. It's worth, exploring. If you have clients or you're in the situation, I think it's worth exploring if this is an option to protect you. Even again, like I said, to kick that can down the road a bit. If I have to have a loss, and this is what we're talking about, a loss in the real estate market, I rather, mitigate or lessen that loss. Yeah. And maybe this is a way of doing that. So I didn't know about that.
Yeah, again, every bank, the way they do the bank appraisal are a bit different. I think as you update the appraisal throughout the duration, maybe the value is lower.
Right.
Maybe the bank does evaluate it lower. So, but it's hard to say.
Yeah. It's funny because if somebody's moving into a condo and they're putting less than 20% down, CMHC or one of the insurers we have, Sagan or Canada Guarantee, seems to be approving those values too. So maybe it's the same type of blanket.
But you can't get an insured mortgage on a rental.
No, of course. And it's just only in specific circumstances.
So somebody's got to take the risk. Yeah. If it's the insurer or if it's the lender.
To your point, clients absorb some of that risk, but they're absorbing it. And they might have to pay it down the line. So it's an interesting time. And that's, a sign of the times of what's happening with the market.